Hey guys, thank you so much for joining me. Today we're going to be talking about 3 easy ways that you can pay your student loans off faster. Now let's get into it. My first tip is to sign up for autopay. It only takes a couple of minutes and most lenders will give you a discount on your interest rate just for signing up. All you have to do to sign up for autopay is go to your lender's website, enter in your bank account information, and give them permission to automatically take your payment out each month. The nice thing about this is you'll never have to remember to make a payment again, and you can even choose the day of the month that you want your payment to be taken out on. So let's talk about that discount on your interest rate that I mentioned earlier. Right now, if you have a federal loan, you can qualify for 0.25% off of your interest rate just for signing up for autopay. Now, this is also the case for some private lenders like SoFi. Now, I know what you're thinking, 0.25% off does not sound like much at all. But let's take a look at an example. So say you owe $30,000 in student loans. At a 5.5% interest rate over a 10-year period, you will end up paying $9,069 in interest alone. But if you sign up for autopay, your interest rate will drop to 5.25%, which means you'll end up paying $8,625 in interest. That saves you about $444, which is a whole monthly payment. You'll pay off your student loans 1 month faster just by signing up for autopay. Okay, on to tip number 2. Look into refinancing your loans. Now, I know this one can seem intimidating, but it could potentially save you time and money on your loans. So refinancing is essentially switching your lender to one that will give you a better interest rate. For this option, you'll definitely want to do your research, but the good news is you can get a quote with no obligation. So if a lender looks interesting to you, go ahead and fill out the application and see if you qualify. If you do, then great. They'll offer you an interest rate and a new monthly payment. And if it's better than what you currently have, then consider it. But if it's not any better, then you don't have to refinance with them. And it's as simple as that. I personally refinanced with SoFi. And in my case, one of my loans actually already had a lower interest rate than what I was being offered. So what I ended up doing is refinancing all of my loans except for that one. With that, I ended up saving about 0.5%. Again, this is not a huge difference, but over the lifetime of your loan, this will add up. So a few things to note about refinancing. You'll likely have to have good credit and show steady income in order to qualify. In addition, if you're currently signed up for a federal loan program such as loan forgiveness or income-driven repayment, then you might not want to refinance just because private lenders typically don't have programs like these. Oh, and another thing to think about is your lender will likely ask you if you want a fixed interest rate or a variable interest rate. Now, a fixed interest rate just means that your interest rate will stay steady over the lifetime of your loan, while a variable interest rate could sometimes be lower, sometimes be higher, but the idea is that it could change at any time. So in my case, I went with a fixed interest rate just because while a variable interest rate can start off lower, it can change at any time, which makes it a little bit more risky and harder to plan for payments. All right, now on to tip number 3. Have any extra payments that you make be applied directly towards your principal balance. Now, what I mean by this is normally if you make an extra payment on your loan, your lender will actually decide how to apply it towards your interest versus your principal. But did you know that you can actually tell your lender to apply any extra payment amount directly to your principal balance? This is important because it can actually save you money in the long term. And here's why. Your interest is calculated every month by multiplying your interest rate and your principal balance. So by applying that extra payment directly to your principal amount, then you're essentially reducing the interest that you're going to owe next month. And this is going to kind of cause a snowball effect. So little by little, you're actually going to end up owing less than you would if you just let your lender kind of apply your payment as they see fit. Of course, before making any extra payments on your loans, be sure to have a few months worth of money saved up in an emergency fund. And also consider if it makes more sense to pay off other debts, such as high interest rate credit cards. You also might want to prioritize investing right now, and that's okay. These are all very personal decisions, and as long as you take a moment to evaluate your options, there is no right or wrong answer here. As a bonus tip, see if your employer is willing to pay money towards your student loans. I know some employers will actually pay off student loans after just a couple years of working for them. In my case, my employer actually pays a small amount towards my student loans each month, and it's made all the difference. It's worth looking into, so I say, why not ask your employer about it? All right, so just to recap, we talked about 3 easy ways that you can pay your student loans off faster by signing up for autopay, looking into refinancing, and finally having any extra payments that you make be applied directly towards your principal balance. I hope that this video gave you some good ideas on how to pay your loans off faster and gave you hope that there is light at the end of the tunnel. If you have any tips or strategies that have worked for you in the past, please consider sharing them in the comment section below. Best of luck on your finance journey. Stay positive. You can do this, and I will see you in the next video. Bye.